Hello and good morning everybody. Welcome to this week's Gold and Silver Club end of week review. So we've had a very interesting week this last week, guys, especially with the gold and silver market. So we've got lots to get through. Welcome guys, good to see lots of familiar faces on the call and some of our Gold and Silver Club traders as well. There's quite a few of you, so just like to say especially hi to Ingrid, Andrew, Baz. Nick is joining me on the call as well to help answer any questions, so we'll get cracking. Today we'll be reviewing the latest developments in the commodities markets and analysing the week's performance. So as always guys, we'll be looking at the end of week summary for gold, silver and commodity currencies. We'll be looking at the top trades of the week, live market commentary and technical analysis, the week ahead, so key events looking forward and any questions and answers. So this week, the big headline news on gold was the gold flash crash, and we saw the price of gold go from $1,750 all the way down to test $1,705 just within one day, and that was a huge move in terms of the gold and silver markets, and we'll go over that today in terms of the flash crash. So why did this happen? There's been a lot of speculation about the causes. It was a 24-ton gold sale on the COMEX on Wednesday. The motivations for this, there's a lot of speculation about this, that a lot of speculators are betting on a resolution of the US fiscal cliff soon. So as well as the faster pace of economic recovery in the US versus other parts of the world, thus boosting the attractiveness of the US dollar. And we all know if the US dollar is strong, gold and silver sell off. And we did have a big move to the upside on Wednesday on the US dollar, and what we actually saw happen is as the gold price came down and started to retest around about initially the 1740 level, we were seeing the price stay around that sort of level, and it came down, tested 1730, and then stop losses started to get hit, and very quickly the price really tumbled. Silver as well, so both big momentum to the downside, which actually we've seen a big bounce and recovery this week already. In the past 2 days, the S&P 500 index rebounded by 1.22%, and US home sales rose by 5.2% in October. These were also kind of caused some choppiness this week in the US dollar index, so does reflect optimism towards the US economy heading into 2013, and the dollar index has gained strength this week, although it's been a choppy ride. We'll show you what's happened with the US dollar index, but more than other times in the last year, particularly at the moment, especially during the US election, the US dollar is really a big indicator as to what gold and silver and the commodity currencies will be doing at the moment. So very important for us to have on our charts currently for trading gold and silver. So we'll be talking about this a little bit further today, but that's really the big news this week, the gold flash crash. So a little bit about myself and Nick before we continue. So if this is your first time on one of these webinars, I'm Phil Carr, professional trader and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the biggest financial markets in the world, Forex, gold, silver and oil. I've trained thousands of individuals to become independent traders, successfully manage their own investment portfolio, and responsible for the research and development of the Gold and Silver Club's trademark strategies, which have a proven track record of generating returns for traders. I'm a regular contributor to a number of financial publications and speaker at various trading seminars and workshops. Joining me on the call is Nick Cowsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through some of his first-hand relationships with the world's most successful traders he's discovered a formula, mindset and tool that give any individual the definitive edge to make money in any economy. Also regularly writes for a number of global publications, financial publications. We've both appeared frequently on various television, most recently on Swiss TV, on Dukascopy Swiss TV, just giving our predictions on gold and silver for Q4. This is just a few publications. This is Global Banking and Finance Review. We just did a piece recently on how to profit during volatile times. It's just International Life magazine and the South African. So that's just a little bit about our background, guys, before we continue. So you're in safe hands this morning. If this is your first time on one of our webinars, this is just a snippet from our interview with Swiss TV. Okay, so let's get cracking. Let's have a look at the gold price this morning. So we've obviously seen quite a rebound as well as coming down to test some real lows. Very interestingly, we tested 1705 again, which has been held support earlier on in November. But yeah, if you look at your charts at the moment, let's look at the gold price right now, and let's yeah, if anyone would just like to type in what the price is at the moment, or if this is if you've not got the gold chart, what you think the price is at the moment. Okay, yes, spot on, Baz. Quick off the mark there. Yeah, 1729, spot on. So, yeah, price this morning of gold is $1,729. And we're going to go through the top trades of the week. So we're really we've had the range this week, 1750 all the way down to 1707. So gold's back in the mid-range, just above this 1727 sort of level of resistance and support, Fibonacci level. So we'll go through that shortly on our live technical analysis. So how we traded it this week, the top trades that we've had this week at the Gold and Silver Club. First of all, I just want to bring your attention, this is a trade setup we showed you last week, one of the top trades of the week, where we got in at 1707, exited at 1727, 200 pips profit, 70 pips risk, practically a 3-to-1 risk to reward ratio. So we all showed you that trade last week. And gold, we talk about it a lot, it's very cyclical in nature. The markets do often tend to repeat themselves. And this week we saw exactly the same move. So price came down to 1707, alerts went off, we had our you know, alert set off at this level, and we had exactly the same move again just within 24 hours. So getting in on gold again at 1707, exactly the same trades, the same level of risk there, 70-point risk. We're looking for 200 pips profit. The price came back, retested that 1727 Fibonacci level again. It's really consolidated at that level, so very happy with 200 points just in literally 24 hours on the trade, and a 3-to-1 risk to reward. So yeah, fantastic for us trading gold. This flash crash this week has presented a nice buying opportunity, and certainly good for all those bargain hunters out there looking to get into a good price on gold. Obviously not so good for those who were trying to stay in the long haul if they bought similar around about the 1750 level, not a level that we bought from, but 1707 represented a fantastic opportunity if you were liquid enough just to be able to get into that trade. So that's one of our top trades on gold. Silver, very similar situation with silver. Silver came and tested this 33 level again. It did break through. It came down to the 32.89. It came down ever so slightly, broke through a Fibonacci level, but we did afterwards see the candlestick like a dragonfly doji or inverted hammer, which represented that we're getting a lot of buying. The price came down, retested that 32.90ish level again, and then the price came up fairly strongly. So it was time, we had confirmation around the 33 level that the price certainly was being supported at that level, and 20 pip risk, so stop just under that 32.80 level for the trade. And then we've essentially had one lot had a $200 risk and profited by 117 pips. So we got back to a previous resistance of 34.20 within 2 days. We hit that level yesterday, so actually just over 36 hours it rebounded spectacularly, and we were pretty much back at the same price where we were prior to Wednesday. So it really was a flash crash on Wednesday, and these volatility like this does present some fantastic trading opportunities if you're ready for it and you've got your alerts set. And that's a nice move that we had on silver. We also had Australian US dollar this week. We came and tested fairly strong level of resistance at 104.79, represented a good risk to reward. So just getting in that, selling short from that level, fairly tight stop loss, 15 pip stop loss. To the downside, we came and we tested a key Fibonacci level for 47 pips, 3-to-1 risk to reward. So out for 470 profit at one lot, and you can see where we've actually been supported at this level, and the US dollar index then started to reverse and come back down. So we saw Australian US dollar get supported, and we just reversed our position and were able to go in long then, and you can see where we've got in long and we just got out at the previous resistance where we previously sold. So that was very nice. That was another 45 pips there. Similar trade, 15 pip risk, 45 pip profit, 3-to-1 risk to reward. So those are really the top trades of the week. Very much we were US dollar index sort of correlated this week. It was very important for our trading, so we'll come on to that next actually, and yeah, we'll do some live market technical analysis, and we'll see what's going on with the markets today, and we'll look at the US dollar index as well. So we're just going to switch our screens over so you can see that, so just bear with me whilst I get this the screens ready for you. Okay, so here we go, the bottom right hand corner. So this is the US dollar index, and you can see the choppiness we've had this week with the US dollar index. So this is just representing on a daily time frame to the bottom right here. You can see where we had a large sell-off last week on the Friday, where we had actually on Black Friday after our webinar. For those of you who are on the webinar, be very interested to see how everybody got on who actually trades gold and silver, because we were looking at a breakout, potential breakout scenario of 1740. We were looking at two scenarios: either the price to come way down from there and retest the 1727 or 1721, or a breakout from about 38 level. We actually got the breakout. The US dollar index came down hugely on Friday afternoon around about 3 o'clock, had a big breakout on gold and silver to the upside. So we finally did see that breakout setup we were looking at. So what are we looking at the moment? I just note as well, it wasn't any sort of recommendation on that trade. We were just looking at price action, just the setups that were available. But we're just going to have a look at the US dollar index right now. So what we can see, it's been fairly choppy. At the moment, we've come down, we've retested this level of around about 80 on the US dollar index, and that seems to be a fairly consistent level of support. You can see here we've put in a candlestick, like inverted hammer. We've come down, retested again, and it's like a tweezer where you have two hammers which form at the same level there, where we've got two dragonfly dojis, actually is probably the better word for it. You can see where the price has actually come down, retested, it's come back up, it's come down, retested, and the main body here is showing that the price is potentially been supported now and going to go back up to the upside. So if that does happen, we will see gold and silver perhaps pull back a little bit, although they're fairly consolidated at the moment around about the 1,730 level on gold and above 34 on silver. So we are at a bit of a decision point, and obviously we're moving in to December. I know some institutions and some traders are already shutting up shop for December, so we may start to see volumes die down. We've got non-farm payroll next Friday, which is probably one of the last bursts of real big volatility, and then as we come into December, it's going to be a quieter time where we can take advantage of range-bound trading. So let me just bring up the charts there, and we're going to have a look what's going on in the market at the moment. Okay, so first of all, here is the gold move. So you can see where we actually, on the 15th of November, this is the trade that we previously took, where we came down, retested this 1707 level, and we had exactly the same setup this week. So obviously we had, for those of you who place your alerts and so on, we had all the alerts going off when we came down to this level, potential entry level. We wanted to watch what the price would do. We did see the price fairly strongly rebound from that level again. Obviously there's a lot of buy orders going in around that 1707 level. So we had a big move to the upside. We got back to 1727, key level we were looking at, and right now we're just above 1727, so we're at 1729 at the moment. So in terms of gold at the moment, it's going to be very much just based on how the dollar is going to operate for the rest of the day. So whether we're going to now continue and we're going to see just a slowly sort of grinding up now on gold from its current point here, whether we're going to come down and retest these lower fib levels. Certainly we're going to be very interested if the price does come down and retest these lows here of November where we've previously got in. Okay, we're going to look at silver. So silver has essentially done, it's come down and retested again. You can see these lows here of about 32.80. This is the level that we tested this week on silver, and was very, we held this support level again. We had a big move to the downside. We've come and retested these 33 level was a very kind of key area for us to look at. We broke through that Fibonacci level, but we got to a level of previous support around 32.85 to 89. And you can see where the price is completely reversed. We're right back up to where we were at the beginning of the week. So very much a flash crash in silver, and hopefully some of you profited from that big move to the downside and were able to trade that. Must note we had to be cautious in just making sure that we weren't about to see a massive sell-off. If we'd broken these like 33 levels significantly and started coming down towards 32.50, we would have really waited until the price came back to test these 31.50 to 31.70. So if we did see a break, we would have been cautious to get in until we got to retest these price action levels around about 31.78, 31.75 sort of level. But we did hold, represented a lovely trade to the upside. So now silver is right back where we started at the beginning of the week. So it's got a decision point to make in terms of are we going to break out the upside? Is there enough news to push it to the upside? So we are looking at potential next levels here. These are the levels, these are the price action levels we'll be looking at, 34.75 if we continue to grind higher, and 35. So we really need to, if we get back up to 35 sort of level here, this is the highs of September, then we are very interested to see if we can stage a further move to the upside, which potentially we could see. There's not too much resistance in between 35 to 37, so if we can break higher, we would see probably some high momentum moves to the upside. This is going to depend, of course, on what the US dollar index does as well. If we may just consolidate and continue to hold above this 34 level, or we may keep on coming down and retesting this 33 level. So those are the three scenarios we're really looking at right now on silver currently. We're going to just cast our eye. Actually, oil it's been very interesting this week. Crude oil actually came down and it tested again this 108.43 Fibonacci level. Yes. This level has presented some previous, if I just clean my screen for you, bear with me, so you can see this is quite spectacular. So obviously some big buyers who like getting in at 108.43. So we had this level respected. We've broken through it a fair bit over October and November. There have been a couple of trades, especially we had one in mid-September where the price just with pinpoint accuracy bounced off 108.43, and we actually had this happen again this week. So you can see here where the price has actually come down and it's just retested this Fibonacci level, and with pinpoint accuracy we bounced off it, and at the moment the price, I know some of our traders took this also, our Gold and Silver Club traders, and we're up, the move is up around about 250 odd points at the moment, but it's just the accuracy with which that price bounced off that level, and you can see here how, you know, key these levels are. You can see where traders take profit, 112.23 thereabouts, and the level here 108.43 has been supported. So crude oil, very nice price action move this week. And we'll just move across to our commodity currencies. Okay, so commodity currencies wise, we had Australian USD. You can see where we had some nice positions this week. So this is where we're showing you we had the sell short, the fib level got respected, and we had a nice long position on there. And in fact, the price came, you could have actually got 3 trades out of that, where the price has actually come up and retested this resistance level again and come down. So we've potentially, we got 2 of those, but potentially a 3rd trade as well, where you can see the price has just tested this level of resistance, turned around and sold off again. We've obviously broken through that level at the moment on Australian US dollar, as we've had a little bit more strength in the US dollar index. That's really we've had a very much sideways market, but sideways markets can be very profitable for currencies in gold and silver, because you can literally, you can have 3 times, so you can have the option of just staying in one trade and trying to get more points out of that trade, but if you're able to take 3 times trades, 3 trades at 45 points, obviously that very quickly adds up to be more than just one large trade in a lot of scenarios. So That's more swing trading that we had there this week on Australian US dollar. And let's look at New Zealand US dollar. So New Zealand US dollar is actually interesting. That's been supported at the moment by a price action level you can see here. This 23.6 retracement level. We've been supported on this. So that's the third bounce really over. So we're on 4-hour time frame there. So New Zealand US dollar looking interesting at the moment. So are we going to see this level supported and another move back to test these highs? If we break down from this level, this is logically if we come down severely where we might find the next level of support. But we are being supported by this level at the moment here. So New Zealand US dollar one to watch certainly at the moment. We're going to have a look at USD Canadian dollar. USD Canadian dollar has been quite useful this week in terms of it's followed the US dollar index spectacularly well. So we have seen very choppy moves actually on USD CAD, but we've got a level of support which hasn't really broken through too much. It's around about this level here. So it's about 0.99145, and just have a look at how low we've come there. Yeah, it's only really, that's 10 points or so there. So each time we've come down to retest this level, we have bounced to the upside. This is where you see you've got the prices essentially being supported. So each time we're coming and bouncing off this level, we're seeing some bounces in the range of about 30 to 50 points. So we're just moving sideways on USD Canadian dollar at the moment. So there's been some nice bounces off support, a bit more choppy on the short side. There's not really, actually if you have a look at this, we do have a clear, we haven't got loads of bounce on this, but you can see where the price, where traders are taking profit at the moment on USD Canadian dollar on the long side. So yeah, we've had fairly predictable week in terms of just swing trades this week for both Australian US dollar, USD CAD, gold, silver have provided fantastic opportunities from getting in on the lows which haven't been broken this week. So that's really wraps it up, guys, for the live market commentary, and then we'll look at what we need to pay attention to on the week looking forward. Okay, so we've still got a fair bit of news coming out. Okay, here we go. So we've got a few questions coming in now as well. So let's just have a look at these very briefly. Hi there, Memo. What do you expect for the Euro USD? We're not going to cover the Euro USD in this session today at the moment, Memo. But what we will say is the US dollar index. If you do see obviously we see a rally to the upside in the USD index this next week or the week moving forward, you would see weakness in the euro and vice versa if the USD index breaks through. We're being supported at a key level at the moment, so if you can get US dollar index up on your charts, 80 is the key level we're being supported at the moment. Each time we've come to retest that, we've held it. So if we now get a rally to the upside on the US dollar index, Euro USD will have some weakness. And if the US dollar index breaks the 80 level and moves to the downside, you're going to see Euro USD would go to the upside. That's the best way to look at it in terms of correlation there. Obviously pay attention to the Euro news as well, but really the US dollar index is key at the moment for driving a lot of markets. So we're going to move on to the week ahead. So in terms of, yeah, that's right, Black, at 80 level is absolutely key on US dollar index. The week ahead, so key events looking forward, Monday the 3rd of December next week, so 3 p.m. we've got the US ISM Manufacturing Index. So that is the Institute of Supply Management Manufacturing Index, measures the relative level of business conditions. So that includes employment, production, new orders, prices, supply deliveries and inventories. It's compiled of a survey of approximately 400 purchasing managers, and it's the index, if the level is above 50 indicates industry expansion, below that indicates contraction. Why do we care about this announcement? The reason we're interested is in a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And obviously we've got a strong correlation there with gold, silver, and also obviously the euro and other currencies. or next Tuesday, for those who trade Australian AUD USD, we've got the interest rate decisions. So it's going to be early in the morning, in all honesty. But actually, to be fair, some of you are. This is for London. Some of you're logging on from all over the world here. So for those of you in Australia or Asia Pacific, you've got the Australian interest rate decision. That's the Reserve Bank of Australia, and they are going to be looking at consensus on where to set the rate, and these interest changes are very important in terms of the currency valuation. So a higher than expected rate is bullish for the Australian US dollar, while a lower than expected rate is bearish for Australian US dollar. So that's again important because it's correlated to the gold price as well. Okay, and of course, if you're just simply trading Australian US dollar, you do want to make sure you are well aware of that if you're in a position on that pair. Okay, so next Wednesday we have the CAD interest rate decision. So those of you who also trade the commodity currency USD Canadian dollar, Bank of Canada Governing Council members come to a consensus on where to set the rate. Traders watch interest rate changes closely, as a short-term interest rates are the primary factor in currency valuation. So again, a higher than expected rate is bullish for USD Canadian dollar, while a lower than expected rate is bearish for USD Canadian dollar. So again, that's important because we see correlations with the USD CAD, with the dollar index and gold. And oil as well. Next Wednesday, 5th of December, so we've got the New Zealand dollar interest rate decision. So a higher than expected rate is bullish for the New Zealand dollar, while a lower than expected rate is bearish. So we've got quite a lot of news announcements which affect the commodity currencies next week to be keeping an eye on, certainly. And then obviously the big one next week is going to be Friday at 1:30 p.m. US non-farm payroll. So this is a big market mover. It measures the US employment change in the number of people employed in America. It's important. Job creation is an important indicator of consumer spending. Higher than expected reading is taken as bullish for the US dollar index, while a lower than expected reading is taken as bearish for the US dollar index. So again, as some of you guys have also pointed out, we want to be watching this level at the moment of 80 on the US dollar index, see if that's going to hold over the next week, and we want to be paying a lot of attention to that, certainly on Friday's non-farm payroll in terms of the next moves on gold and silver. Okay, fantastic. So we're coming near to wrap up. It's great to see a lot of you on the call, and if you do have any more questions, do fire away before we wrap up in just a minute or so. So for those of you who want to learn more, in terms of learning more strategies and how to trade, you can go to our website by application only, www.thegoldandsilverclub.com/course form. So how to do that? Very simply, you go to our website, there's a Learn to Trade tab at the top there, and if you fill in the application there, to join the Gold and Silver Club Trader Coaching Program, have a consultation call. You can certainly do that just via the website. You can also call us if you've got any questions at either our UK or Asia office. So if you do want to contact us at our Asia office, you can call us on 852-8191-0403. If you want to contact our UK office, that's 0207-193-0403, or of course you can email us at office@thegoldandsilverclub.com.